Hi, you guys. Welcome back to the show. And today we're going to talk about a poll that I did on my channel. I did a poll asking what your favorite dividend ETF was and why. And you guys, the overwhelming winner was VYM, the Vanguard High Dividend Yield ETF. Now, in second place was SPHD, which is the Invesco monthly paying dividend low volatility ETF. And if you're interested in finding out, I made a video on it. I'll link it up here and we'll talk about it. But now we're going to talk about, in depth, we're going to talk about VYM. So VYM, here we are, we're on ETF.com. And you guys, if you're looking to find an ETF that is, that you want to find information about, this is ETF.com has every single ETF you can think of. Now, I'm not sponsored by them, but I love their site. And it's a free site. So VYM offers a diversified conservative approach to high dividend yield in a low cost wrapper. The fund's broad basket stems partly from its comparatively lax dividend screens. Firms are ranked by forecast dividends over the next 12 months. Those in the top half are selected. Stocks that make the cut are weighted by market cap rather than by dividends, an approach also used by our benchmark. As a result, the broad portfolio aligns well with our benchmark by firm size, yield, sector exposure. REITs are out of bounds too. In keeping with the conservative approach, the fund is a possible choice for those looking for a broad dividend focus. Now, VYM tracks the FTSE High Dividend Yield ETF, and this index selects high dividend paying U.S. companies, excluding REITs, and weights them by market cap. So there are no REITs in here, which is good because, as you know, dividends paid from REITs are always taxed as ordinary income. So this fund's been around since November of 2006. The best thing about it, you guys, it's got the lowest fee of pretty much any dividend ETF out there at 0.06%. So just $6 for every $10,000 that you have invested per year. It's a fairly large fund with about $29.75 billion of assets under management, and it tried an average trading volume of about 142 million a day. So this is a large ETF. All right, so if we take a look at the comparative, now they compared this to SDY, which is the Spider High Dividend Yield. The first thing that jumps out at me, you guys, is the expense ratio difference. As I said, 0.06% compared to SDY at 0.35%. So that one's almost 6 times as expensive. That adds up over years. If we look at the difference in assets under management, it's about twice as much. And here's the big difference is, the one thing I like about VYM, you guys, is that it has 417 holdings versus SDY, which only has 118. The average spread is pretty minimal, 0.01 to 0.02, but you can see that the difference in the trading volume is more than double per day. If we take a look at how we've done year to date, we see that as everything, it dropped in March pretty bad. Now, you guys, we're not back to where we started, and actually for the year, VYM is down 2.56%. And all of the companies here are American companies. So if we look at the breakdown of the sectors, we see that the biggest portion of this is in financials, you guys, in the banking industry, and that's about 18.25%. Second is consumer non-cyclical, followed by healthcare at about 15.44%. Technology makes up about 11.5%. Utilities make a little over 9%. Industrials make just about 9%. Consumer cyclicals, 6.67%. Energy makes up about 5%, as well as telecommunications, and basic materials is the smallest holding at about 4.3%. If we look at the top 10 holdings, these are all companies that most of us who dividend invest love. Johnson & Johnson, Procter & Gamble, JP Morgan Chase, Verizon, Pfizer, Walmart, AT&T, Comcast, Merck, and the last in the top 10 is Intel. So I can say that personally, I own the top 3. I own number 5, I own number 6, and I own number 7. So I hold about 6 of the 10 in there in individuals as well. So these are companies that people depend on for dividends. Now, the nice thing about this, as I said, when it comes to tax time, is if you hold this in a taxable account, these dividends are qualified dividends. So as long as you've held them for the proper amount of time, you get the long-term capital gains rate or the qualified dividend rate, which is, for most of us, is 15%. So you guys, when I asked the question, I got quite a few responses. And as I said, overwhelmingly, about 62% of the votes went to VYM. Now, Vanguard is a company that I really love. Their fees are low cost. Their funds are reasonably competitive to other in the market, and you save the money on the fees. This is a fund that I personally hold as well. Before I started doing individual dividend stocks, this was my first foray into dividend investing. Now, as you know, most ETFs pay you, and index funds pay you some kind of a dividend. In the case of VYM, it's paid quarterly, and currently it has a dividend yield of 3.27%. So when we're looking for dividend stocks, we're looking at somewhere between 3 and 4%, right? So, and this can vary day to day based on the NAV price. As the price goes down, obviously the dividend yield goes up, and vice versa. But these are all companies that pay good, solid dividends to their investors. And this is a good way for a lot of people to have some dividend stocks without having the headache of going out and buying individual stocks. If you're going to do individual stocks, you guys, you got to do your homework. All right. Well, I hope you guys got something out of this. If you did, do me a favor. Drop me a big like. It really helps the algorithm. If you're not already subscribed, you know the deal. Subscribe, hit the red button, ring the bell. You get notified for every time I make a video. I try to make at least 1 or 2 a week. We'll see you again on the next one. All right. Thanks.